My name, as Reed said, is Thomas Wood. I'm the Director of Trading Operations at ValueCharts.com. Today we're going to be talking about Intro to Naked Trading and Price Action Reading. So it's a pretty neat topic. It's really fun. The way we're going to go through it is I'll go through each section, and at the end of each section I'll do Q&A. And if you have a question, though, send it in anytime best to answer if it's pertinent to what we're actually discussing, what's on the screen. And at the end, if we have enough time, I'll actually pull up live charts and we can take a look at the markets today so you can kind of see what happened today. Now, first things first, though, we have to go through a risk disclaimer. Trader investing carries a high level of risk and is not suitable for all persons. Before deciding to trade or invest, you should carefully consider your investment objectives, level of experience, and ability to tolerate your risk. This content is subject to change at any time without notice and is provided for the sole purpose of education and assistance making independent investment decisions. ValueCharts.com is taking reasonable measures to ensure the accuracy of your information contained herein. However, ValueCharts.com does not guarantee its accuracy and is not liable for any loss or damage that may result directly or indirectly from such content from an inability to access such information or any delay in or failure of the transmission of instruction or notification in connection therewith. Any past performance results returned for illustration example only are hypothetical and as such have many inherent limitations. No representation has been made that the account will or is likely to achieve profits or losses similar to those shown. Past performance is not necessarily indicative of future results. I feel like one of those new drug commercials. Then, along the same lines, I'm not going to read this one to you. This is just CFTC Rule 4.41, basically saying, look, if we're showing you something in the past, obviously there's no guarantee that it's going to happen again in the future. Now, that being said, we trade this every day in front of hundreds of people with real money, and we put our own money online. I put my own money online. I wouldn't do that if I didn't think it worked. Okay? So let's go ahead and jump in. Now, first things first, these are some questions that everybody always asks. This is great, but how do I get in? So you're going to say, well, look, that looks really good. It looks like it would work, but how do I actually get into the trade? Don't worry. It's broken down to sections. So part one is going to be understanding to read the price chart, and then part two is how you actually get in and how to exit and manage the trade itself. All right? So now let me slow down a little bit. I always go really fast when I go through all that stuff. So what is naked trading and how do you know market direction? So first things, what is naked trading? Naked trading is referring to trading based on the price action alone. So we're not putting hundreds of indicators on the chart. We're not cluttering up our screen. It's just reading the price chart itself. It's naked price action reading. You don't need any indicators to see the trading setups that are quote-unquote naked trading. All right, it's designed to be used without having to look at the charts. What you're doing with naked trading is we're basically going back to the basics. All right, almost all the indicators out there are based on price action or volume or combination. So why not just learn how to read the price action itself? When we were putting together this workshop, when I was putting together this whole entire strategy of trading this way, I was talking to people and everybody was saying, well, yeah, that's great, but they're saying I have to pay $10,000 to get these indicators. I have to pay $20,000 to get these indicators. Now, I'm not here telling you that indicators are bad. Nothing like that. I use indicators every day. I trade with them. I think they add an extreme. They're a very good advantage to trading. But you need to understand how the price action itself works in order to be able to effectively use and take the biggest advantage of the setups that you can find with indicators. So first things first, every major trend is going to have one thing in common, all right? If it's a trending market, it's going to have a series of higher highs and higher lows if it's an uptrend, or lower highs and lower lows, all right? Period. Uptrend, definition of uptrend is higher highs and higher lows. Definition of downtrend is lower highs and lower lows. The market very rarely just goes straight up or straight down, and even when it does go straight up or straight down, normally if you drill down to a small time frame, you'll see it moving like this. All right, so if we're looking at higher highs and higher lows, that means I'm looking like this. All right, low, high, higher low, higher high, higher low, higher high, higher low. All right, this is an uptrend, and a downtrend would be the opposite. So once you understand how to identify and what to look for when you're looking for the trend, you can understand and identify the overall direction of the market, and then you can get in a trade and stay in a trade for a much larger trend, much larger trending move. You can apply this type of setup as well, intraday, end of day, options, forex, futures, equities, whatever you trade, it doesn't matter. The analysis is still the same. Now, one thing that happens, a lot of times traders they'll tell me, I'm having a really hard time understanding or identifying the trend. All right, all you have to do get up, take a step back. Look at the major turning points. All right, are they going higher? Do you have higher highs and higher lows, or lower highs and lower lows? All right, it's pretty simple. But a lot of times traders I talk to, they get caught up on the small things, the noise in the market, and they lose focus. But the market's basically always going to tell you which way it's going. All right, don't worry about finding the very top or the very bottom of the market. All right, this strategy is not designed to do that. We're not trying to pick tops and bottoms. We're trying to catch that middle 80%. If you could catch 80% of every trade or every trend out there, you'd be a pretty happy trader, I would think. Okay, now I'm not saying that there's not ways of picking tops and bottoms, because there absolutely are, divergences, candlestick reversals, etc., but we're not doing that here. What we're focusing on is that middle 80%. So once you enter into this type of trending trade, you can manage your stop by trailing it just behind the highest high or the lowest low. So for example, if we're looking at an uptrend here, let me find my mouse, if the market is trending higher like this, all right, let's say we entered right over here. If we entered here, then our stop would be down here, and then we'd wait, it would go up, pull back down, put in a higher low. As soon as it pivoted back up to about here, then we move our stop right up around here. So stop 2, we go up, pull back down, go higher again, trail our stop once again. That way, as long as we continue to put in higher lows, as long as the trend continues, we stay in it. And when would we get out? Well, we would get out as soon as this market turned around and stopped putting in higher lows. Why do we want to exit when it stops putting in higher lows? Well, the definition of an uptrend is higher highs and higher lows. So if we're no longer putting in higher lows, we're either consolidating or reversing. So the trend has come to an end, or it's gone into consolidation. So again, the reason we trail our stops this way is because this guarantees you stay in a trade as long as the trend continues your direction. If a previous high or low is broken, then the market's entering consolidation or it's reversing. So we want to be out of it anyway. We make money when the market moves. We're not trying to make money when the market's in consolidation. So let me show you kind of what this looks like. This is crude oil on a daily price chart. This is on daily. All right, pretty simple. So we're going to look at a low here, and then a high, and a higher low, and a higher high, and a higher low, and a higher high. All right, so we can say this, by definition of a trend, is an uptrend. Then what happens? We come all the way over, we break through the previous swing low. So what's that mean? Well, that means we're either consolidating or reversing. So now we have a lower low. We're not in a downtrend yet, though. We're either consolidation or reversal. We bounce, and then by about this point right here, all right, by about there, now we have a lower high as well. This becomes our lower high. This becomes our downtrend. So ET. Now we have lower low plus a lower high. Definition of a downtrend is lower highs and lower lows. So let's look at our pivots again. Lower low, lower high, all the way down. Lower lows, lower highs as the market continues to sell off. Now, if you had traded this, if you've been trading crude oil, you would have been selling, or you could have been selling, right here as soon as the downtrend started, if you're a trend follower, and stayed with this down move from about $95 a barrel all the way down, and you would have been out at around 50, which is $45,000 a contract. All right, not too bad of a trade if you ask me. And all you had to do was you get in, and then you just trail your stop just above each lower high, just above each lower high as you move down. Now, you may have gotten chopped out at one point, okay? At one point, you might have gotten kicked out of it. Would have been right here, all right? And we'll talk about why that's okay and how you would have gotten back in right over here in just a minute. So, for example's sake, going forward, what I'm going to do is I'm going to have these lines pre-drawn so I don't have to show you the pivots that we're looking at, all right, because what we're looking at here is pivots. I forgot to mention that. We're looking at pivot points. We're not looking at each bar, one bar in relation to another, okay? So a trend is higher high, higher low pivots, not higher high, higher low price bars, all right? So we look at this. Here's our uptrend, higher highs and higher lows. And they break to a lower low, bounce back up, put in a lower high, and right here, all right, right there, we go into our downtrend. Seems pretty simple, right? Seems pretty straightforward. We continue to go lower highs, lower lows. Here we get that little bounce where it could have chopped you out, knocked you out of it, but then you still would have had a profitable trade, and then you would have gotten right back in it and caught the rest of the down move. Alrighty, let's take another look. This is Tesla. So this is an equity, Tesla, which most people are aware of. This is on a daily price chart. And again, you can do this on intraday. I'll show you some intraday examples here in a little bit. But here's a high, okay? So here, a high, and then a low, and then we have a lower high. Now, in order for it to be a downtrend, we have to have a lower low, right? So that means we're in consolidation. So what happens here? Well, we put in a higher low, and then as soon as we break that point right there, now we have a higher high, and now we're in an uptrend. So then we go pivot high, low, high, low, high. So this here, higher high, higher low, higher high, higher low, all the way up is an uptrend. Pretty simple, okay, pretty simple concept. Everybody's understanding, everybody's following along so far. And then come back down, we break the low here, put in a lower low, all right, which means uptrend is over. We're either consolidating or reversing. We bounce, we put in a lower high as of this gap down. All right, now how do you tell when that pivot is putting in the lower high? So I say as of this gap down, that's a lower high. How do you know that that gap down is what caused that to be a lower high? Well, it's about a 50% retracement on the bounce, okay? A little over 50%. So if we have bounced here, we're looking at about 50% of the move back down there. We're going to say, all right, there's a pivot high. Make sense? So now, as of this point here, we're now in a downtrend. So now we have a lower low and a lower high and a lower low. Now I know you're sitting there going, well, these are huge swings. You're sitting there through a move from 220 to 260, a $40 price move. That's huge. Yes, you are correct. And we'll talk about that here in just a minute. Is an uptrend. All right, again, we're looking at the major pivots. There's minor pivots in here. I'm not worried about the minor pivots yet. I just want you to understand how to identify the overall trend. Okay, when we come down, we break down, we have a lower low as of breaking through the previous pivot low, drop, and then a lower high, and then a lower low, and lower high, lower low, lower high, lower low, lower high, lower low, lower high. Pretty simple. Now you're in a downtrend. All right, everybody following along. If you're not understanding what I'm saying, just let me know, and I'll try to explain it in a different way. And again, we're looking at the major pivot points. Here's another one. This is gold. This is intraday on a 30-minute price chart. So for those of you that are day traders, and you were trying to find where's the market going today, or where's it going tomorrow, well, this is on a 30-minute chart. So here we have a low and a high, and we have a higher low and a lower high. So what does that mean? Because the definition of an uptrend is higher highs and higher lows, and the definition of a downtrend is lower highs and lower lows. So when we look at this and we have a higher low and a lower high, that means consolidation. What do we do when we get consolidation? Draw your trend lines for your breakout. Okay? Once you break out, now we put in a lower low, bounce back up, put in a lower high, spike down again, lower low, bounce back up, lower high, higher low. So we have a higher low, we can draw a trend line again. Instead of putting in another, or instead of breaking through the trend line, continuing lower, instead it breaks up, it puts in a higher high. So now we have an uptrend again, higher highs and higher lows. We go all the way up to our pivot, pull back, pivot down, rally once again to another higher high. Now this move here, you're talking from 1200 to 1230 or 1240 up here, which is about $4,000 a contract in one day. But it had told you the day before that the trend had reversed. Okay, so you knew which direction to be trading, and I'll show you how you enter that here in just a minute. This is Apple. This is on a 5-minute chart. If you want, depending on the type of trader you are, because different traders trade different ways, right? Some people want to be swing traders, some want to be day traders. All right, if you're a day trader, you can trade a shorter time frame. You're a swing trader, you're going to use a longer time frame. All you have to do is adjust the time frame you're looking at to fit the type of trade you're trying to stay in. All right, so a 5-minute trend is obviously not going to last as long as a daily trend. If you're trading off a daily price chart, looking at daily price trends, then you're looking at a move that'll last. It'll be a swing trade setup. Okay. So here's Apple on a 5-minute chart. Once again, right at the top, we have our pivot high and low, and then inside of that we have narrowing range, which means we can draw trend lines for our breakout. There's our pennant. Here's our breakout to signify downtrend, because then we have a lower high here. This becomes a lower high, and this becomes a lower low. All right, then lower high, lower low, all the way down. Right here, we put in a higher low. Overall trend is still down though, because we have lower highs, so we can draw another trend line. Break the trend line, you can sell on the break. Once again, lower lows, lower highs, all the way down. We continue down, and then right here, we put in a higher low. All right, so when we have that higher low, we can draw another trend line just like we did back here. It never breaks the trend line. Instead, what it does is it goes up and breaks the previous pivot high and gives us a higher high. Now you have an uptrend. Higher high plus higher low equals uptrend. So then we pull back, put another higher low, higher high, higher low, higher high. So you're in an uptrend here, you're in a downtrend all the way over here. Not bad, okay? Again, we're looking at the middle 80%. We're not picking the bottom, we're not picking the top. We're looking at the middle 80% of the move that's shown by the trend. So any questions on identifying the trend itself? Again, we're looking at the major pivot points. Haven't told you how to get in. I'm about to tell you how you actually enter the trade. Higher high, just remember, higher high plus higher low equals uptrend. Lower high plus lower low equals downtrend. All right? So you would have had 2 trades on Apple. Potentially. You actually would have had 2 or 3. And I'll show you here in just a second. So now that you understand what the trend is, how you determine the trend direction, all right? Now that you understand how to determine the trend direction, now you start looking for your entries. So the trend is going to give us our directional bias, or what's called directional bias, which is if it's in an uptrend, we want to be taking long trades. If it's in a downtrend, we want to be taking short trades. All right, the way we enter is by using what we call micro trends and micro trend breakouts. So now that you understand what the trend is by looking at the major pivots, you'll start to see micro trends or miniature uptrends within the context of major downtrend, or miniature downtrends within the context of major uptrend. These micro trends often give us great entry opportunities to jump back in when a major trend resumes its original direction. Okay, the micro trend is basically the market taking a breather before continuing one direction or the other. So here you go. When you see a short-term series of higher low, higher high within the context of a major downtrend, draw a trend line connecting your lows. When the trend line is broken, you enter the short. Now when I enter a trade on a micro trend or on any breakout, I'm entering as soon as it breaks out. I'm not waiting for it to close above or below the trend line. Now some of you may say that's more aggressive, but I'll show you why I do that here in just a minute. When you see a short-term series of lower high, lower lows within the context of a major uptrend, draw a trend line connecting the highs. When the trend line is broken, you enter long. All right, so this is that same crude oil chart. Remember, I kind of zoomed in so you can see a little bit closer. As of this point here, we're now in a downtrend. All right, so from there on, we're looking for shorts. So where is the micro trends? Well, here's a pivot low, here's a pivot high, here's a higher low, here's a higher high. But the major swings, the big pivots, are lower high, lower lows. Okay, so what do? We sell on the break of the line. All right, small uptrend within the context of large downtrend. Here's another one. This one, we put in a higher pivot low. We did not put in a higher pivot high. Okay, we put in a higher pivot low within the context of an overall downtrend. Okay, so what does this mean? We sell on the break of the low, or on the break of the trend line that connects the lows. Here's another one. We go up, pull back down, we go back up again. All right, So we have a higher pivot low within the context of major downswing. Draw a trend line connecting the lows, sell in the break of the trend line. Here's our move down. All right. Now when you look at each one of these, what's happening as soon as you get in? Let's count the price bars after we get in. So we sell right here, okay? And then we have 1, 2, 3 price bars, we're in the money. Let's look at it again. 1, 2, 3 price bars, we're in the money. 1, 2, 3 price bars, we're in the money. Okay? So these micro trends, you should be getting in the money very, very quickly, assuming that your break point is correct, assuming that you're reading the chart correctly. So with these micro trends or quick scalps in the opposite direction, you might play as a scalp on a swing play going the other way. All right, my question for you, Paul, is why would you want to try to take this long here to scalp it, counter trend, when you can take this short here, trade with the trend, so it's easier, and make 3 times as much money with less risk? Potentially, I should say. Okay, no, it's not only on the daily, it's on whatever time frame you want. Now, I'm not saying that, again, I'm not saying that it's bad to counter trend trade. You can counter trend trade. There are ways of doing it, absolutely. What we're talking about today, though, is a trading with the trend. It's a trend following strategy. It's how to enter into the trend. So let's take a look. This was that Apple chart. Okay, this is on that 5-minute basis again. So you're looking short term. Remember, we broke down and we had the lower highs, lower lows. So the big trend, major trend here was down. All right. And then what happens here? We have a low and they have a higher low, but we do not have higher highs. So we have a higher low within the context of a major downtrend. So what do? Draw a trend line connecting the lows. We sell in the break. All right. Not a bad entry. Let's do another one. Count your price bars, by the way. 1, 2, 3. Within 15 minutes, you're already up from 14. You're up 50 cents within 15 minutes. Just about. Not bad. Here's another one. We put in another higher low compared to the previous major pivot low, which was down here, within the context of an overall downtrend. So we'll draw our trend line. There's our trend line going across those lows. Here's our short. Now this is why I sell on the break as opposed to waiting for it to actually close through the trend line. If you sold on the break right here, then that means your entry is at about 113.25. If you waited until it closed, you're now entering at 12.75, 112.75. Okay, so you have 75 cents that you missed. And if you go and look at price charts and look at the micro trends, when these break, they should run right away. Okay? A lot of times what I do is I'll put a time stop on it, meaning I'll get in, and if within 3 or 4 price bars it's not making me money, I'm out of it, whether it's hit my stop loss or not. All right, now here's another one. We have a higher low going right into the close, higher low within the context of overall downtrend. Now what happens here? We open the next morning and we gap through the floor, gap through that trend line. Please do not sell this, okay? Yes, it broke the micro trend, but the move already took place. All right? If you're selling it this far down, you run the risk of this happening, a gap fill. We're only interested in taking those trades where we can get in 3-4 ticks after the trend line's broken, 3-4 ticks after the trend line's broken. All right? So if it gaps through it, leave it alone. And this actually, by the way, is one of those candlestick patterns. It's a reversal pattern. It's a hammer. Had a really nice hammer. You ended up climbing back up and filling the gap. Then let's look. Remember, we come and we put in a higher low here and put in a higher high right there. So as of this point, we're in an uptrend. So now we're looking for long trades. So we've had 1 short, 2 shorts, and then you had the missed short because it gapped, and then we changed to an uptrend. And look here. Here's a lower pivot high within the context of an overall uptrend. So what do? We buy on the break of the trend line. There's our long entry. What happens? Count your price bars. 1, 2, 3. Market's way up here, and you continue to run, just like it's supposed to. No problem, Paul. So here's another example. This is the British pound US dollar once again. So remember over here we were in an uptrend, and then we changed to a downtrend as of this point here. So as of right over here, Well, we'll put in the lower high, so as at this point here, downtrend. Now, here we have a high and a low and a lower high and lower low, micro downtrend within context of major uptrend. Here's a break. There's your long entry. This is why you don't wait for the close. If you waited for the close, you missed out on 100 pips. Okay? There's our long counter price bars. 1, 2, 3. You're all the way up. You're up 200 pips by the time the third day is by. Not too shabby, and continues to run. Now, you're sitting here going, okay, well, yeah, you got in that long on the micro trend, but then you left your stop at the low and you got out when the trend reversed, which means you actually lost on a trade that you were up 400 pips. No. When I trade, okay, I don't stick in a trade. I don't stay in a trade for the entire trend. I'm not a trend follower in that sense. Now, I trade with the trend, but I'm not going to stay in the trend or in the trade for the entirety of the trend. What I do is I use a multiple of my risk as a target. So let's say I took the long from here. My stop was right down here. So let's say I have a 100 pips risk. Well, if I'm trading with the trend and I have a 100 pip risk, then I'm going to go 3-to-1 reward risk, which means I'm going to have a 3x target. So if I'm risking 100 pips, I'm going for 300 pips with my target. Okay, so there's my exit. Just like with these micro downtrends. So overall trend is down. Here's the uptrend. There's our uptrend line. Here's our sell. Let's say in this case we're risking 100 pips again. 300 pips is going to be my target because it's with the trend. Then we have another micro trend. Enter again, another 100 pip risk, 300 pip target. Okay. This is a daily price chart. This is a daily price chart. If you're sitting here going, well, you're risking 100 pips on every trade, that's huge. No, I'm not risking 100 pips on every trade. That's only if you're trading off a daily price chart. You want less risk? Drill down to a shorter time frame, like a 5-minute chart or a 500 tick chart. Okay, you go down to a shorter time frame. My average risk in crude oil is $110. Okay, so 11 ticks. Okay, what do you do if price action doesn't give you any micro returns to enter? Then you don't enter. Why would we want to force a trade when we can wait, sit back and wait for a good trading opportunity to show up, like a micro trend? Here's another example. This is the dollar-yen. This is intraday on a 15-minute chart. Overall trend is down. Here we have a higher pivot low within the context of a downtrend. Draw our trend line, sell on the break. Stops up here. Target would have been right about here. Now here, this actually, I would have considered this a trend reversal. Would have considered this a trend reversal. However, I still would have taken this short here. Why? The reason I still take this short is because we have a really well-defined trend line that's been hit 3 times that the market has pivoted off of every single time. And then when we break down here, we put in a lower high. Now, I wouldn't have sold right on the trend break. I would have sold on the break of the support. So that means this was the support. My short would have been right below that. Okay? And then you catch your down move, another micro uptrend, higher pivot low within the context of overall down move, sell on the break, then market runs again. All right? But what about if you don't get 300 pips? Then you would have been stopped out at break even, because once you're up about 1-to-1 or 1.5-to-1, you go break even. Or if you're trading a large enough position size, you're going to take off half profit at 1.5-to-1, full profit at 2 or 3-to-1, or 1/2 profit 2-to-1, full profit at 3-to-1. Okay? So this is what we have for you. Now, we're going to go through and we're going to pull up live charts here. There's a lot of questions coming through. I know I'm going to answer these. And we're also going to pull up live charts because I don't want you to sit here and think I'm only cherry picking certain examples. So I tried to go through this really fast so we can get to the live charts. But before that, what we have for you today is the entire Naked Trading Workshop. Okay, it's about 3.5 hours long, 4 hours long if I remember correctly. It's on demand. We sold it originally for $400. Okay, you're getting it today for $297. Okay, go to valuecharts.com/naked. valuecharts.com/naked. Also, you'll get the on-demand version of the workshop, plus you can come into the trading room, join us in the trading room for an entire week, and you can come see us trading these live. Again, that's valuecharts.com/naked. This is what some people have been saying about it. Thomas, I want to let you know how much I appreciated your Naked Trading Workshop. Learned how to recognize and apply the foundational principles of raw price action is extremely powerful. Techniques you've shared have made quite an impact on my trading. Many thanks. That's from Rich. And Dale said, I wanted to thank you for putting together a naked trading workshop. After reviewing it several times and testing the concepts the last 2 weeks, I really think it has helped to simplify my entries and give me a clear rule-based approach to help eliminate the hesitation I have struggled with. This is the 5th workshop of yours I've attended, and I think it's your best work. This is the one I think everyone should start from and build on. Thanks for your help. This is what's covered in it. This is what is in the workshop itself. We're going to talk about what is a high-low and a low-high reversal. So for those of you that are going, well, I want to trade counter trend, we're going to talk about how to trade reversal patterns. We're going to talk about high probability channel breakouts. We're going to talk about trends and micro trends, and then skipping the false signals, because there are false signals with trends and micro trends. Okay, we're going to talk about consolidation patterns. Which way will they break out to? We're going to talk about entering second breaks. So when is the market running stops? So when does it break the trend line, bounce, run all the stops, and then break again? And when do you know that that's what it's doing? How do you know that that's what it's doing? We're going to talk about why indicators are clouding your judgment and a whole lot more. All right, so there's a ton of stuff in this workshop. Everybody that has taken it has loved it. I have yet to have anybody say they did not learn anything from it. Again, valuecharts.com/naked. Now, I think I have about 10 minutes left. So let's take a look at some live charts. This is crude oil today. All righty? So can you tell me which direction the trend is in crude? If you're in the trading room, by the way, if you were in the trading room, you know we were buyers in the break above 46.23. And what happened? Broke out of 46.23, went into consolidation, and we said, okay, now we're buyers on the break above 46.46. Broke through 46.46, came right back down, and we said, hey, look, it's retesting that previously broken resistance, now is support. Watch for it to continue higher. And it broke out again, and then broke out again. All right, so entire trend, so the trend, major trend is up. Then we have, here's your micro trend. There's your micro trend. Here's your entry. If you're in the trading room, we talked about this, 47.25. So there's your entry, 47.25. Count your price bars, 1, 2, 3. So if you're entering at 28 or 29, by the time you get up here, so 15, 20 minutes later, you're now up $600 a contract, or $500 a contract. Not too bad. Trend stays bullish all the way up until right up here, and that's where you would have been trailing your stop, and you would have been out at 48.14. So that trade right there is about $800 a contract. Not a bad move. Then what happens? Well, we start putting in lower high, lower low pivots. Now, we're not going to go counter trend in a market like this. And people were asking me, hey, can we go short crude? When would you want to go short crude? And I said, I wouldn't want to go short crude. I think it's going to keep going higher. Well, here's your micro trend. Here's your breakout. Counter price bars. 1, 2, 3. So again, in 15 minutes, you went from 48.09 to 48.35, 48.39 for simplicity's sake. That means you're up in 15 minutes another $300 a contract. All right. Makes sense? So what are some markets you want to look at? Which ones do you want to look at? Be happy to look at them. Here's the S&P. You can look up equities as well. So where are the pivots? Well, here was a previous pivot high and low, lower high, lower low. Then we break to a higher high and put in a higher low. Okay, so as of this point, trend shifts. And again, if you were in the trading room, we talked about this right here. Here's your long, count your price bars, 1, 2, 3, you're in the money. And then another 10 minutes, you're up a couple $100 contract. Another hour, you're up $500 contract. And then what happens? We come all the way down, we bounce, we put in a lower high and a lower low, and you have 2 micro trends. Here's your first one. And again, if you're in the trading room, we sold this. Now, I actually mismanaged my stop on this one. I took the short on the breakdown, pulled down. When it sold off, I moved my stop to break even too soon. It bounced up, knocked me out at break even, then went all the way down and hit my target. Then we go and we put in another micro trend. Here's your trend line going across your lows, just like this. Here's your breakdown. Count your price bars. 1, 2, 3. By the third price bar, you're up from 69 down to 65. So 4 points. Not bad. Again, you can get the workshop on demand. Go to valuecharts.com/naked. Again, www.valuecharts.com/naked. That's what we have. You don't have to have indicators for it. No, it's all about reading the price action itself. What about bonds? Here's bonds. This is on a 5-minute chart. Trend was down this morning, okay? And if you were in the trading room, okay, if you were in the trading room, we said trend is down. And as of this price bar right here, I was saying it looks like we're just putting in a lower high. And what happens? It continued to run lower. You put another lower high, dropped all the way down, and then what happens? You broke to a higher high. What do we say? Looks like it's reversing. What happens? You put in higher highs, higher lows. Here's your first micro trend. Here's your breakout. Broke, retested, and then climbed again. Bonds really didn't go very far today, though. Paul, send an email to support@valuecharts.com. If you need help with anything, send an email to support@valuecharts.com. We'd be happy to help you with getting it all set up so that you can actually watch the workshop and stuff. All right, some other markets. You want to see dollar loonie. Sorry, there's a lot of people asking about specific markets, so I'm trying to get to all of them. All right, trend is up here. All right, uptrend. Where's your micro trends? You got 2 of them. Here's your first one. Here's your second one. The second one is as textbook as it gets. All right, break high, rally, break high, rally. Then what happens? We come down, we broke to a lower low. So now we are either consolidating or reversing. They bounce back up, put in a lower high, lower low, lower high, lower low. Where's our micro trend? First micro trend you got was really late in the day, so I wouldn't have wanted to trade it because it's too late in the day anyway. But it would have been right over here. Here's your break point. Sold off, retrace to retest, last kiss, and then sells it off and continues the downtrend. REGN. Regeneron Pharmaceuticals. So let's look at a daily price chart. Trend was up. It was up. Higher highs, higher lows. You had a couple micro trends on the way up, things like this right here. Broke it, and then look at 3 days later. This is why, again, you don't wait for it to close above. Wait for the close above, that means you bought up here, as opposed to buying at 521, you bought at 532. All right, nice up move though. Then what happens? We come down, we break to a lower low. So now we have consolidation reversal. So as of this point here, we're either consolidating or reversing. Then what do? Put in a nice micro uptrend within the context of a larger downtrend because we just broke into lower lows. There's your micro trend. Here's your break point. That's at 521. And you dropped counter price bars 1, 2, 3 from 521 to 444 in 3 days. Not bad at all. You said Min is the best. Value chart service is bar 1 as far as service on anything in the web. Thanks, Paul. Glad to hear it. I'll have to tell Min that. Yeah, pretty boring day in bonds. I absolutely agree. It was all about crude oil today. Big fan of valuecharts.com. You guys are the best, learning more and more every day. Putting in the hard work yards on all learning material and workshops. Glad to hear it, Paul. Thank you. You're very welcome, Tara. Any other markets you want to look at? Amazon. Sure thing. I think I have about 5 minutes left. Again, to get the workshop, just go to valuecharts.com/naked. I'll show you what that looks like here really quick. Once you go there, it'll bring you to this page right here. 297, Naked Trading Workshop on demand. You're just going to fill out all your information, place your order. You'll get an email that gives it to you. You'll get an email that gives you the workshop. And you can watch it 500 times if you would, if your heart so desires. What is NQ Momentum? NQ Cycle Finder. Those are indicators that I use. Like I said, I'm not saying indicators are bad. I use indicators every single day. I do not think indicators are bad. But you need to understand how to trade price action itself in order to benefit from the indicators, in my opinion. Amazon, overall uptrend. You had a couple consolidation periods here, micro trends. Break 1, 2, 3, and then rallied. Not bad. Here This is kind of interesting where we are, because this is what we're looking at right now with Amazon. There you go. That's what we're looking at. Which way is it going to break? We don't know yet. Almost had a bearish engulfing today, but didn't quite. So what about Nasdaq on a 5-minute chart? Here's Nasdaq on a 5-minute chart. Trend was up, up, up. If you were in the trading room this morning, we talked about this right here. All the indices were in consolidation. And actually, we didn't do a trend line. We did a resistance level and said, watch for it to break through resistance. And it broke and then rallied. Trend was up, up, up until you came down and broke through this trend line right here. Broke down, also changing trend direction because we broke the previous pivot low. Lower highs, lower lows, all the way down. And we went into consolidation here. And so far, we've just kind of chopped around, still in a downtrend though. What about the Dow? Here's the Dow futures. Again, first thing this morning, here was your micro trend. There was your breakout, big run up, pulled all the way down, gave you a W pattern, broke high again. However, on the W, it could not follow through. It ended up putting in a major pivot high, reversing back down, changing trend to bearish. Then you had a head and shoulders, broke the neckline on the head and shoulders, and dropped going into the close of futures trading. Anything else? Any other markets y'all would like to look at? Euro. Here's the euro. Here is the euro. Which way is the trend going? Trend is up. Where are your micro trends? You had one right over here. There's your first one. Broke high. That was about 7 a.m. Eastern. And then again, if you were in the trading room, you know we said this was a buy on a break above 1, 2, 3, 4. Why did we say it was a buy above 1.1234? Because it was a bull flag on a 60-minute chart, and you see what happened there. Just continued with the uptrend and rallied quite a bit. We were also at the same time. So this is what we actually said with euros. Kind of interesting. It was a sell below 1.12 and a quarter, so 1.1225, and it was a buy above 1.1234, based on a 30 and a 60-minute price chart, and ended up rallying, breaking the high and jumped. And again, look at what it does. It breaks, and then 3 price bars later, you're already up $200 plus a contract. What about gold? Here's gold. Gold's easy. If you were in the trading room today, we said it was a buy above this high here, 4160. So it was a long on a break above 4160. You see what happened when we broke 4160. It jumped and never looked back. Went all the way from 4160 to 51. So that's $1,000 a contract in a couple of hours. Not bad. Trend is up. Trend was up, is up, was up, and stayed up. Yep. Up, 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 up. This was non-farm payroll. So this is just a breakout off of non-farm payroll. But we were actually watching that on the, if you're in the trading room for non-farm payroll, was it the 240 or the, what time frame was it? It was a 30-minute chart. We're looking at trend line here, going like this. And non-farm payroll came out and it just jumped through this trend line and rocketed higher. If you're taking chart requests, what about price line? You were bullish after the last downtrend, and now you're not so sure. What time frame, Paul? Here's price line. It's a 30-minute chart. On a 30-minute chart, you're in an uptrend and you have a micro trend. There you go. There's your setup for a 30-minute chart. So trend is up. You have a micro downtrend. If it breaks trend line, it'll be bullish. If we come down and break this low, it's still bear. It'll be bearish. So if we go down, if we bounce up and put in a lower high, it's going to be bearish. We're going to look at a 5-minute chart. Here's a 5-minute chart. Trend was up, up, up. You had a micro trend on Friday. You had a micro trend that basically lasted all of, actually, I guess, depending on time frames you're looking at, depending on the type of trader you are, whether you're not your longer time frame or shorter time frame, this was overall downtrend, micro uptrend, and break lower. Or you could have been looking at this as micro downtrend in context of overall uptrend, and your break high would have been there.
Hey, Thomas, we're just about out of time. Just a heads up.
Yep. All right, thanks. I want to thank you all for coming out. I appreciate it. That's all I have for you for today. Hopefully you learned something. I try to make sure I teach people something every time I come in and do one of these webinars because you're taking time out of your day to spend with me. Again, you can get the workshop, valuecharts.com/naked. Also, you can come join us in the trading room. If you want to join us in the trading room, just go to valuecharts.com/go. Go to valuecharts.com/go, and you can come into the trading room for an entire month for $7. So hopefully you enjoyed it. Hopefully you learned something. I will see you in the trading room in the future. And that's all for me. So until next time, happy trading.